The cryptography guarantees your sovereignty. The infrastructure takes it away. Decentralized AI requires an absolute standard of user trust. If you are going to upload your entire digital footprint, your Reddit history, your Spotify habits, your private ChatGPT conversations to train global AI models, the protocol handling that data must be impenetrable. Vana presents the starkest contradiction in modern Web3 architecture. It possesses a mathematically brilliant system for securing data sovereignty, controlled entirely by a highly centralized governance and validator structure. The network launched in December 2024 via Binance Launchpool to massive attention. It generated genuine user adoption that outpaces almost every competitor in the space. Yet the Vana token suffered an immediate, severe, and extended decline from its all-time high, failing to capture the value of the very data it secures. To understand why, we have to run a strict architectural audit. We are mapping the protocol's cryptographic promises directly against the hard reality of its network execution. Evaluating DAI projects today requires looking past the encryption specs. Identifying the precise gap between a project's technology and its political governance is the only way to measure actual network risk. Vana is an EVM-compatible Layer 1 blockchain built strictly for one purpose: returning data ownership to users so they can monetize it for AI training. Mainnet went live on the 16th of December 2024, utilizing Binance Launchpool for its initial distribution. Trading data introduces a strict technical bottleneck. You cannot validate the authenticity of private information on a public ledger without exposing the plaintext data to the open web. This diagram illustrates Vana's structural solution. The stack starts with the EVM-compatible base chain, handling core consensus. Above is the data portability layer, relying on personal servers. Your exported accounts flow into isolated nodes. You retain absolute control over these servers, secured by grant-enforced APIs. The top tier is the data liquidity layer, where data DAOs aggregate similar datasets into specific liquidity pools for AI buyers. When routing data, the network proves it is real and yours, using a proof of contribution function. That function executes inside Intel TDX hardware enclaves on the Satya network, providing secure validation. By isolating the plaintext in personal servers and executing the validation in sealed hardware environments, this bifurcated structure solves the friction of trading private datasets. The network proves the data is valuable without ever exposing the raw information. The cryptography securing this pipeline relies on the established OpenPGP standard. Data is encrypted at the source before it ever touches Vana infrastructure. Keys are generated directly from the user's EVM wallet using HKDF SHA-256 derivation. You control the keys. You control the decryption. Every permission right you sign is recorded directly on-chain, creating a strict, immutable log of who is allowed to query your servers. Vana's core contributors have zero backdoor access. They cannot alter permission states or access plaintext files. We mentioned Trusted Execution Environments, or TEEs, earlier. These Intel chips are the final failsafe in the sovereignty engine. TEEs actively blind the network's own validators. Even the machines executing the proof of contribution function cannot read the plaintext data they are actively processing. In July 2025, Vana executed the Capella Hardfork. At block height 4,009,180, the network increased native throughput and integrated stronger privacy safeguards for deploying these data liquidity pools. 3 months prior to Capella, Vana introduced the VRC20 token standard, replacing their restrictive top 16 ranking system with an open framework for any compliant data pool. VRC20 acts as a novel financial primitive. It takes verified, privacy-preserving datasets and converts them into liquid on-chain tokens with continuous liquidity incentives weighted by actual trading volume. By combining OpenPGP, user-derived keys, hardware enclaves, and liquid VRC20 wrappers, Vana built arguably the most mathematically secure data sovereignty environment operating in Web3 today. The supply-side scale matches the architecture. Vana processes data for over 1 million users across hundreds of active data DAOs. This growth is driven by highly active organic communities, notably the massive r/DataDAO subreddit, generating real participants uploading actual data. Most competing data protocols rely on inflated testnet interactions. Vana's adoption consists of live mainnet verified exports. This timeline tracks Vana's $25 million in venture funding. It secured a $2 million seed round from Polychain, an $18 million Series A from Paradigm, and a $5 million strategic injection from Coinbase Ventures. In February 2025, YZ Labs executed an undisclosed strategic investment, officially bringing CZ onto the project as an advisor. The capital backing and the verified user base prove the supply side of the equation works. Millions of users are ready to monetize their data. This immediately raises the stakes for the protocol to actually execute on value capture. Despite millions of users and Tier 1 exchange listings, the Vana token reached its all-time high in December 2024, the day after launch, and then suffered a severe and extended price collapse. The market sees the flaw in the infrastructure. The chain currently operates under a proof-of-staked authority model. Block production is entirely permissioned. Validators are selected by the core team, directly contradicting the core ethos of a user-owned, decentralized network. Even if selected, a prospective Layer 1 validator faces a massive capital requirement of 35,000 Vana just to operate a node. The political structure mirrors the hardware centralization. The Vana Foundation controls the treasury, and despite having infrastructure in place for tally and snapshot, there is a total absence of active on-chain voting from the community. This pie chart maps the fixed 120 million token supply. The allocations are broken down into 44% for the community, 22.9% for the ecosystem, 18.8% for core contributors, and 14.2% for investors. A 66.9% combined allocation for community and ecosystem appears healthy, but it is deceptive. The vast majority of these tokens remain locked and strictly directed by the foundation. Insiders faced a 13-month cliff from the initial December 2024 launch, meaning investor tokens began unlocking around January 2026. This area chart maps out the resulting supply shock. Vana faces continuous, multi-year linear selling pressure from contributor and investor unlocks, stretching through 2028 and beyond. The Vana paradox resolves into simple economics. A mathematically perfect data architecture cannot accrue decentralized market value if it is constrained by permissioned execution and insider-heavy supply dynamics. The audit results in a freedom score of 59 out of 100, a C. The return score is 55 out of 100, also a C. Vana built the most technically complete DAI framework in crypto, but until the execution matches the engineering, it remains a centralized network trading on decentralized branding. Changing this requires specific technical catalysts. The team must publish a concrete timeline for migrating to permissionless block production and activate genuine on-chain governance where token holders dictate treasury spending. The economic model requires an equally critical catalyst. Vana must publish anonymized data proving that enterprise AI companies are actually paying meaningful access fees for this aggregated user data.